I'm always in it for the long term when it comes to YouTube, real estate, Mia, asking you to sign up for my free ebook about investing in real estate so I can get your email and then eventually ask you about your car's extended warranty being expired, and definitely investing in the stock market, which is why I like investing in ETFs or exchange traded funds. What's up guys, it's Avery here. My channel is typically about personal finance as well as investing in real estate, and today we're going to talk about some ETFs or exchange traded funds that you could own for life and what exactly an ETF is. So an ETF is essentially a basket of stocks, and it's a security that will typically follow an index like the S&P 500, or it could follow a commodity like oil, or it could also follow a sector like tech or energy. An ETF isn't to be confused with a mutual fund or an index fund. You can purchase it throughout the day like you would any other stock, whereas with a mutual fund, you can only get a price at the end of the day, as well as there's much higher minimums when it comes to purchasing a mutual fund. If you wanted to purchase an index fund like VTSAX, you would need a minimum of $3,000. But if you wanted to purchase a very similar ETF like VTI, you would only need about $230 to $250 depending on where that actual share price is at the time you're watching this video or when you purchase that ETF. So I really like ETFs because you can invest in them extremely passively. It's not like buying stocks or analyzing companies. You're just buying a basket of stocks because you believe in a sector, you believe in an economy, or you believe in a different type of commodity or something like that. So it's really easy to invest in, and you can do it extremely passively, which is exactly what I do. And I've narrowed it down to 5 ETFs that you could purchase over your life, keeping it very simple and just buying them at the same rate that you get paid or that you have any other type of monthly expenses. So stick along for the ride and think about the 5 ETFs that I'm going to throw at you today, and make sure you do your own research because I'm not a financial advisor. I'm just a content creator on YouTube. So that first ETF that I'm going to talk about, and one that's extremely popular, is known as VOO or VU. But actually no one says VU, I just think it's kind of fun to say. But it just tracks the entirety of the S&P 500, which is just an index that tracks 500 of the largest companies in the US. So you can feel really good about having a lot of growth and betting a lot of your money on the US economy with a lot of holdings in things like tech. So Apple, Tesla, Microsoft, and other stocks alike, and it'll have a large leaning towards that type of sector. And the reason why ETFs, and this one especially, is quite good is because of the very low management fees. It only has a 0.03% management fee. So that means every $10,000 that you've invested, you only have to pay $3 every year in order to be owning that fund. VOO also has about $770 billion in assets. So these companies are very strong, have a lot of money associated with them, and they're very much unlikely to go under. And if some of them are performing poorly, or if some of those tech companies are performing really highly, then you're able to get the gains of all of them and feel pretty strongly about the returns that you may have with this specific ETF. The next ETF is VTI, and VTI is actually the very first ETF that I ever purchased, and one that I still purchase quite often today, and is probably my largest holding. VTF is a total stock market ETF and only holds US based stocks. But unlike VOO, where it only tracks 500 stocks, this one will track 3,900 stocks, which is basically the entirety of the US market. So you're not just betting on the top 500 companies and ones that have done very well, but you are betting on basically every single company in the US stock market and having that increase over the course of your ownership of this fund. So VTI is really great. It's extremely diversified. You are just following the whole stock market. You don't have to pick specific stocks or even niche down into specific subsets of funds like VOO that are only tracking the top 500. You are tracking basically everything. And similar to VOO, it only has a 0.03% management fee, so it's very low cost for you to own this specific fund. VTI has also had very strong returns since its inception in 2001, boasting an average 8.86% return, and that's starting in 2001. So that has gone through the 2008 financial crisis as well as the 2020 financial crisis, although that financial crisis bounced back quite quickly. So it's had a lot of good returns since inception, and in the last 2 to 3 years, it's gone up a lot in value, similarly to a lot of other stocks and assets. The third ETF that I'm going to talk about is VYM, and VYM is actually the second ETF that I ever purchased. And VYM is really great because it offers you dividends. So when I was looking to get some more income out of my portfolio, gain those dividends, VUIM is where I first look because it has a decent dividend yield and can give you a pretty solid dividend while still being extremely diversified and you not just having to put your money into specific stocks and getting dividends from only those companies. So it's not just getting dividends from all of those companies, but you're getting dividends from a lot of high dividend yield companies within this fund. As of November 30th, VUIM has a dividend yield of 2.8%, which is a pretty decent dividend yield. And if you want to learn more about how dividends work, check out the video up here or down below, and I will link that, and you can learn all about dividends and how much money you need invested in order to actually live off of all of your dividends. But essentially with that number and what it means and the stock price, and the stock price is right around $107 when I'm filming this video. So with that dividend yield, that means that every share of VUIM that you own, you would earn about $3 annually from dividends, which is not very much money when you're thinking about trying to live off of dividends, but it's pretty good for owning one specific ETF. So VUIM is a fund that's mainly comprised of companies that are forecasted to have high dividends, which is why it's able to give you a solid dividend and return when you're owning this specific ETF. The other thing about this ETF is it has a slightly higher management fee than VTI or VOO of 0.06%. So every $10,000 invested, you have $6 that is going towards management fees. But you also do have that dividend yield that is making up for some of those costs. The fourth one that I'm going to talk about is VUG. And VUG gives you a lot of exposure to large growth companies, and it has a slightly higher management fee of 0.04%. So you're able to get these large growth companies in this ETF, so you're not just focused on more and more of them, and it's harder for companies to make the cut because they have to be large growth companies in order to make their way into this ETF. So you can think of it as a subset of VOO because there's about 250 companies within VUG, and a lot of those are also in VOO. But there's going to be a heavier weight on growth of this specific ETF, as well as you're honing in on growth of multiple companies and not just picking one. So you're more diversified in that way, but potentially you could have far more growth than if you had something like VOO or VTI. And speaking of getting a higher return because it's focused on large growth stocks, since 2011, it has had a 27% higher return than VOO. Now, obviously, in the last 10 years, we've seen a really big increase in stocks. We've been on this crazy bull run, even though we had that small dip in 2020. So a lot of these companies that have been growing and these large growth companies have had a very high spike in growth, which is attributed to a lot of that return. The final one that I'm going to talk about is QQQ or Trip Qs. No one probably calls it that, but it's fun to give these other names. So when it sounds like you're investing in these extremely boring ETFs, it sounds slightly more interesting. But QQQ will hold 100 of the largest stocks in the entire world. This is the only one that I'm talking about that isn't just US based. So you're going to get a bit more exposure to other companies that aren't just in the US. As I mentioned, it's 100 of the largest US based and non-US based companies, and it's also heavily favored and heavily weighted towards large tech companies. And large tech companies have had a lot of growth and have done very well since tech companies have come into existence. So this is why a lot of people are interested in purchasing this fund, because they can not only get the growth of those large US based companies, but they can get the growth of the non-US based companies. So those are the 5 ETFs that I'm going to talk about today, and ones that you could probably feel quite strongly about owning for life, or if you're new to investing and you're just trying to figure out where to invest your money if you're unsure of in stocks, ETFs, index funds, mutual funds. I think ETFs are a very fantastic place for you to start because there's lower minimums, they're easier to purchase than an index or a mutual fund, as well as the fact that they have far more diversification than if you're just purchasing a specific stock. And a lot of these have tracked and done very well since the inception and their creation. So if you invest in any of these funds, or if you invest in other funds that you think you should be holding for life, let me know in the comments down below. Curious what you might be investing in. And if you've never invested before, let me know if you have any other questions about various platforms that you could start on, or other things that you might need to figure out before going ahead and taking that plunge. But make sure you do take that plunge, because investing your money is the best way towards building your wealth. So thanks for watching. Hopefully you guys enjoyed this video. Make sure that you hit that subscribe button. Help me out for that YouTube algorithm. them, leave a comment as I mentioned. Don't forget to tap that notification bell, smash that like button, help me out for all those things YouTube related. And if you liked me here, don't forget to check me out on TikTok. I like to make a lot of these videos in short form, as well as on Instagram Reels, so you can check me out there. If you have more questions, I'm really open to answering people's questions on my DMs, most likely on Instagram. So again, check me out there. Thanks again for watching, and more wealth is coming your way.